Welcome to Your Business, Your Life with Matt Francesco, your personal financial technician. Whether you've had years of success in your business or just starting out, Highlift Financial can help you create a vision for your business, life, and family, and align these for generational wealth. So as they say, what happens in your life affects your business. And now, on to the show. Well, hello, and welcome again to Your Business, Your Life with me, Matt Francesco. And I'm really excited for this guest because, first off, he's been a shop owner. He's gone through 4 different exits. So I think he's going to be able to relate, to all of those of you who are considering this, kind of what that mindset is, but also a lot of the financial mistakes that a lot of shop owners would make, especially in their bookkeeping and how it's decreasing the value of their business. So I'm really excited to have Bill Park on. He's walked the same road as many of you who are listening. He spent 30 years as a body shop owner and exited 4 businesses. So he's already kind of been down that road. And, he's seen how exhausting it can be between long hours and the daily fires you got to put out. So this led him to start Crunchit Financial Services. And he's on a mission to kind of help shop owners simplify their finances, reduce taxes, and actually build wealth and not just survive the tax season. So we're going to dip into his story, some of the lessons he's learned, and how he's helping shop owners take control of their financial future. So, Bill, welcome again. Welcome to Your Business, Your Life.
Yeah, thank you, Matt. I appreciate you having me on, and thanks for the kind introduction. Yeah, it's certainly been 30 years of being an entrepreneur can wear on you. Especially when you're building businesses and you're learning about deeply about finances and the importance of banking. And gosh, I remember years and years ago when I was starting out and I needed some capital and didn't have anybody to go to, no family members or anything like that. And
Right.
and so I go to a bank and I show them my numbers and the banker's like, what's this? I'm like, well, this is my business and this is what I'm doing. I'm starting my body shop and I'm getting some traction and all this stuff. So I need some money to buy these things. And they're like, well, you got some work to do there. He said to me, and I said, well, okay, what work do I have to do? And he said, well, let me help you understand how a bank views you. Oh,
Oh,
oh, interesting. So he sat there and educated me on that. And he says, when you kind of work on these things, come back. He says, seems like you're kind of going in the right direction. Things are going pretty well. Yeah, I'm excited about it. I think I'm ready now. And he's like, well, you're not ready from a banking perspective. I was like, wow, okay. So I, went back to the drawing board, tightened up my books a bit. And I went back to him 3 times over the course of the year. And I was looking for $50,000 at the time.
okay.
And the last time I went there, he said, he goes, I think you're telling the story that the bank can sit and write the check. And he says, as a matter of fact, he literally pulled his checkbook out of his desk and wrote me a $50,000 check.
Wow.
Now that was when they could actually do that, right?
Yeah, right,
but
right.
I don't think the principles have largely changed. I think the sophistication and the requirements banks need has certainly gone up, right? But I think by and large, the idea of understanding bankability is really critical. And I don't care what industry you're in. It's whether it's a body shop or a landscaper or a hairstylist, you name it, mechanic, they all have the same problems.
Right.
So, and I went through all those, and today still, I think I've got it pretty well figured out, but I still have the problems. As a matter of fact, I was talking to a broker yesterday. I said, I'm looking for some capital on a business venture I'm going to go into. And it was all about, well, let's talk about your numbers, where all this is. This is what in this particular space is what they're looking for. So I already knew that I have this journey to go through. I don't need the money now,
Right.
but I want to be ready to execute the capital when I do need it. So I
Exactly.
have to prepare myself for that.
I want to talk about that because I know you've said that most CPAs, they focus on filing taxes, checking the boxes. Bankers are looking for certain things, and most shop owners, they're at least, most of the ones I've run into were car guys first that became business owners. And so, yeah, they don't always know where to get the guidance. So what are the common mistakes that you find that they're making that's really hurting them from a financing standpoint and from a valuation standpoint?
Wow. Okay.
It's a lot to unpack. So,
It is a lot to unpack, and I'm just trying to think of a good quick story. As a matter of fact, I had an email exchange with one of our clients, super awesome business owner, and he's totally thinking in the right direction. I love how he thinks about his business and where he's going. And he sent me a message about some equipment financing, and then about how, and they're a recent client of ours, and how their CPA has always treated their business right. And his frustration was is like he never felt like he was having a one-to-one conversation. It was always, you know, the accountant, the CPA is thinking about it in terms of, you know, cash basis financing, and then of course taxes to some degree, but not to the extent beyond the business, nothing beyond using capital in other ways. I'll kind of leave it at that.
right,
Right. So he sends me an email asking about these two conditions. And I'm like, wow. I mean, the CPA, all these years you've had, those questions should have been answered a long time ago. Right.
right, right,
And so, I mean, I responded to him, said, yeah, you're financing. I said, this isn't a question of whether or not you should do 0% for 12 months or 4.9% for 36 months.
hmm
It's a question of really what value is that piece of equipment going to deliver to your business? And do you know exactly how to calculate that? And of course, it's all assumptions, right? I mean,
right,
you're going to make some assumptions, but you have to know your business well enough to understand if I exchange a piece of equipment for a service maybe I'm outsourcing,
hmm
there's the data, right? You can run the numbers and be relatively sure that that return on investment calculation is pretty accurate, right?
okay, right.
Would you agree with that?
Oh
Yeah.
yeah, right,
Yeah. Okay. So do that. And I said, at that point, you're going to determine what your payback time is. So then you can look and apply your, do you want, how much liquidity do you want to retain in your business? Are you okay liquids wise and you just don't want to deal with any debt financing, or you want to take the 0%? That's a no brainer. Doesn't cost you anything, right?
right,
That's going to cost you $3,000 or $4,000 a month. How does that affect your cash flow? That's really the question you have to be asking, right?
right,
So
exactly.
that was my response, but the CPA should have done that for him,
Yeah,
right? They didn't do that. And then the other one was about his his W-2 salary. He fully wants to fully fund his retirement, which is great. I love that.
hmm
And and you obviously know why that's a great thing.
right,
And so for him to ask me that question about his wage, how much wages he should take as an owner, single member owner,
right,
versus distributions. He didn't understand any of that
right,
and what that meant. And then what retained earnings meant. He felt that retained earnings were something related to business value.
right.
So there was a big disconnect on that whole cycle, which has been costing him tens of thousands of dollars a year,
Yes.
right?
hmm
That money could have then, if he would have made a different wage change 5 years ago, that difference in wage change and distributions could have paid for his equipment for free.
Right.
so, so that instead he gave it to payroll taxes and Social Security and all those other things. And there's some, obviously Social Security has some longer term benefits, but anyways, I think those two examples is exactly what every shop owner is facing is their CPA doesn't understand the business well enough to coach and guide the financial conversations within the business structure and also the long-term goals of that business owner.
I think that's really a key thing. And that's the one thing that I find a lot of times is that, against a lot of CPAs, and again, I'm not here trying to bash CPAs,
Yeah,
but there's a lot of them that are just tax preparers. Okay. So they're very looking myopically at this year, maybe next year, but not really taking that long term focus. And I think, the things that you do, the things that I do are saying, no, we want to look 5, 10, 20, 30 years down the road. And how is this going to affect you in the long term? You know,
absolutely. Well, I was gonna say you have to be doing two seemingly opposite things at the same time. It may feel that way, right?
Yeah.
Like you can still achieve long-term benefits and pursue short-term cash financial profit gains.
Right.
You don't have to sacrifice either or to get it. And I think that's another thing that's really important to understand.
Yeah, definitely, definitely. And I think that's where, again, having a team approach as a business owner, we all need our CPAs, we all need our business attorneys, but having other people, so people like you at Crunchit that can help them to look at the financials, to get another perspective on it, and then to help them to develop as a team that whole overall strategy. Would you agree with that or?
Oh, geez, it's the who, right?
Right.
It's the absolutely who is the key to everything.
Yeah.
Like who's going to do the structural repairs in your business? Who's going to clean the car? Who's going to intake the vehicle? Who's going to answer the phone? Who's going to take the money to the bank? Who? I mean, you can put the who. The who is everything, and then open up your mind as a business owner that the who doesn't have to be 100% you to control everything.
Right.
And I want to just kind of circle back to the CPA thing one more time, and
Right.
we're probably over abusing them a little bit here,
You are,
but
yeah.
but
They got thick skins, so
that's right. So I recently posted a job on LinkedIn where we're looking for a CPA or an EA. So an EA is an enrolled agent.
right.
So oftentimes the enrolled agent is doing the tax preparation work, and the
Right.
CPA is typically signing off on it. That's the normal. But there are those that do it all, of course. And the EA is probably more familiar with tax filing, by the way, because they do it all the time.
Right.
So anyway, this job posting, I said, look, I'm not looking for a filer. I'm looking for somebody that is a tax strategist. And in my job posting, it was clearly stated that. And then I have a follow-on questionnaire that says, look, I want you to prove that you're not a tax filer, but you're an actual tax strategist that happens to file taxes.
Correct.
Okay. That's what I'm looking for. Right. And I've got 11 people I've responded to in that. Not one of them have responded back to me.
Really? Wow.
Now I've had about 30 applicants.
Mhm.
Out of that, it was about 11 I direct messaged with the second follow on and not one reply yet.
That's crazy. Wow. Isn't that something?
Well, I mean, it just tells you that they're not used to doing that. I mean,
Oh,
that's just right.
oh,
So
right. Oh, right. And especially if you're looking at complex strategies where you're working with a shop owner and maybe he's not, maybe he's 10 years away from exiting. I mean, the strategies are going to be much different and it's kind of out of their wheelhouse because they're not looking that far down the road. I mean, it's interesting because, I've kind of developed a team, over the years, and even if that shop owner has a CPA, it's like I'd like to bring in my tax planning CPA. All right. Because again, and they'll work in conjunction with your guy, but we need to look at the long term of this.
yeah, that's smart. That's so smart to do that.
Yeah. So,
And a second set of eyes. I mean, look, let's face it. We all need a second set of eyes.
oh, exactly. Exactly. And that's where I think, and maybe you can elaborate on this a little more, where your company, Crunchit Financial Services, can kind of come in to help shop owners get that second set of eyes. Can you talk a little bit about what you guys do with them?
We probably have like three buckets of where we focus, and we have an a la carte business, so we can do sort of as little and as much as a body shop owner wants. So ultimately, we take the first principles of just like we fix cars. In other words, we want to completely dismantle that vehicle. We want to do the proper research and due diligence on repair methods. We want to fully understand the policy in which that vehicle is insured, so we understand parts and those things relative to that because they all take a play in it. And that's a whole nother topic, of course, that's pretty hot right now.
Right. Yeah,
But
exactly.
but that same idea, we do that in financials. We have a comprehensive assessment where we engage our clients and we go into their CCC. We pull it apart in the sense of how do people behave in the system?
Mm,
So how are they writing estimates? How are they using the parts code tables? How are postings happening? How often are files left open? How are they clearing out exceptions? All the things that happen in that management tool, And then that then gets reconciled and sent over to QuickBooks. Okay.
Right.
And then
Exactly.
we go into the QuickBooks and say, okay, how's that package coming over? And is that package coming over lining up with that series of chart of accounts? And does that chart of accounts reflect what is important to you as the business owner to measure and hold yourself and your team accountable for long-term growth and profit creation, right?
Right.
So we do every aspect of that.
And I
And
and
then
and I want to
yeah, yeah.
highlight something just real quick on that, and then I'll let you go. I'm
Mhm.
sorry, but because something that really struck me was I think a lot of times business owners, just in general, they get a piece of software and they think, okay, I've got the piece of software now. Uh, Everything's hunky dory. And but if you're not operating the software to maximize the efficiency of it, it's really you've just kind of you've just kind of spent some money. So it's sounding you're helping to do all that reconciliation.
100%. Yes. And we find at most shops are average or below utilization.
Right.
And it's not that they don't want to,
Oh yeah.
but they just don't know how to. They just Nobody's really sat down with them and said, okay, when this is how you use your parts, we'll call it the parts module, this is how you use it fully. And this is the report that ties to it. And this is how it links into your P&L. This is where you can determine your leakage. So there's a whole life cycle in there
Right.
that people haven't really been educated on how those things work together. And when they do, it's like, oh, shoot, that makes sense.
Right.
Right. So we bring that level of training, education to our clients. And in terms of our bookkeeping service, so we do clean. So what I call that cleanup services. So we can go in and do cleanup services for our
Okay.
shops. If they want to then manage the books from there, great. They can take it. They've got a clean slate to start with. We validated everything's moving where it's to go. And then they just take it over from there. And then we do a full service bookkeeping where we actually clean up, and then we do the daily, weekly, monthly reporting, transaction auditing. Literally, we audit every transaction every day. So
Wow.
whatever's gone through that repair center that day, our team, as we do the extraction, we validate all the postings were done correctly, that they're moving into accounting properly, and if there's anything that's missed. So an invoice wasn't scanned to the daily scan folder, if something was posted like a receipt or an ETF came into the bank or a credit came into the bank, but we don't have the offsetting entry or the invoice, the credit memo, whatever that posting is, whatever those transactions that haven't, married together and say, hey, we did this here and here it is over here, right?
Right.
So we find that those missing exceptions, and we generate a report to the shop every day. Here are the 5 things that you have to get solved, and that's part of our daily audit process. And then
That's
that month,
and I just again, I just want to highlight something. I think that's something that's really valuable because again, a business owner and even the staff are going to be so busy in the day-to-day stuff that they're not going to be able to monitor a lot of those things. And I think that's a really critical service.
oh, it is the key. It's really the key to everything. If the shop can do it themselves, if they can build the behavior and the structure to do it themselves, they can certainly do it. But it's an allocation of time and resources. So you have to actually design your model to do that,
Right.
right? And that's where I'd argue is, well, is that really what you want to do?
Yeah. It's another who, not
And
how.
yeah, exactly. So at the end of the day, we're here to support the shop owners to whatever level they want. We're not trying to tell them what to do, but we're saying these are best practice. We know this works. I know it works. I did it in my business,
Right.
and I never had to worry about where my dollars were.
Right.
And if I wanted to know, I knew exactly where to go to get it and how to get it. And I could get it like that.
Right.
And having the ability to make decisions when you understand your financial condition is super powerful, right?
Right.
You can do things quickly. And that's really, really important to be able to do that.
Exactly.
So let me see so I left off. So we got cleanup, we got full service bookkeeping. We also do hybrids.
Mhm.
So if a shop has some existing staff that's doing some books for them, and we want to do a shared responsibility, we're happy to do that as well. Then we do all the month end reporting. We pay sales tax, reconciliations. We don't pay bills, right?
Right.
We don't, all we do is reconcile, tee it up, ready for a check distribution or a second authorization, like through sales tax or something like that, where it's all electronic, anyways.
Right.
So, but everything is audited, validated with supporting documentation.
Hmm.
So every transaction we manage is always the supporting documentation for that transaction.
Gotcha.
And, and so there's no question about audit or where that money went and why it went where it went, or how did you receive that money and what was that money received for?
Right. No, it makes complete sense. So, question I have, and this is something I've just kind of run across, and I thought you'd probably have some really great insights on it, is how clean financials can help to raise the value of your business, especially if your end goal is a third party sale. So you're going to sell to somebody else. Because I've run across shops, you look at it maybe from a revenue standpoint, very similar, but one has clean books, one doesn't, and the valuation that they're getting is much higher on the cleaner books. To talk a little bit about how that affects it.
Oh, you nailed it. You nailed it, Matt. I mean, it just, if you kind of hit it with the simple stick and say, just ask yourself, right? If you hire somebody to come to your house and do some work, right? And they have a one line invoice that says fix leak, okay? And it's $450. And then you got somebody else that comes behind them and says assess leak, okay? Remove panel to validate leak source. Oh, replace three things and that's going to fix the leak and it's $500. Okay? Which one do you trust?
Right. Right.
Okay. I mean, it's if you think about it in simple terms, it's like, okay, take thinking out of the equation in terms of the dollars.
Right.
Make it so clear that that's not the conversation we're having anymore.
Mm,
Okay. Let's talk about the value of the business and let's talk about this buy sell side situation. Why create yourself all those things that make you an attractive as a seller that the buyer is looking for, right?
right.
And when you take money off the table, those other things start to creep up in value creation, right?
Right.
Because their transition from the buy to sell, when they're acquire that business, and the fact that there is behavior around clean financials, that is very attractive for buyers because you've already built that behavior into the business. They're not going to be getting pushback from the fact that they're maybe changing some things or asking for certain numbers or invoices or daily reconciliations because they're already doing that. That's a part of their culture, right?
Right.
So that in itself is going to probably, I don't know, 20, maybe 10 or 20% multiple increase just for simply by doing that. And then really organizing your P&L and your balance sheet that reflects your working capital position, which that's a whole nother conversation.
Right.
I think I don't like it, to be honest, in our business. I think it's overused by buyers, but that's another deal. But still understanding so you can actually have a working capital discussion. So having your P&L and your balance sheet reflect true accrual basis accounting. So your all your chart of accounts are clean. That you let's say you're a multiple shop. So you got shop one, shop two, and shop three, right? I always tell everybody, look, make your business unit your shop one, two, and three, or one, doesn't matter. That performance in that business unit is relative to that business unit. Period. Okay, no leakage, no owner stuff leaking into the P&L because you want to bury something,
Right.
right? All right. You don't need to do that in your financials. That's contrary to what most people think,
Right.
right?
Hmm.
I say create a corporate class. Okay. Whether you're a one shop or multi shop, create a corporate class. And the corporate class are for those things that are truly corporate in nature, that some of it may stay if you leave, but most of it will leave when you leave.
Ah. Okay.
Okay.
Hmm.
So now what you have is there's one area in which your buyer would look at that corporate class to validate that what's staying and what's going, right?
Gotcha.
And you organize that cleanly, then your we'll just use the word EBITDA. Your EBITDA numbers by your business units are perfectly clean. They're
Right.
indisputable.
Right.
It's not a question of whether or not it's going to do it or not, right?
Yeah.
So, and then you have everything else that goes along with that, that you have a good employee roster. So your employee roster tells another story,
Hmm.
right? As you know.
Right.
So and that's part about being clean too, is your financial story is more than just the P&L and balance sheet.
Yeah.
It's, you know, so I would think that, to me, that is the direction that I've used in my business. It made my negotiations never about the P&Ls, because literally the last sale I had, I said, look, our quality of earnings calls 15 minutes. That's what I told them. I said, no, we're not spending any more time on it than that.
Right.
So you have all the access to my financials, my CCC. You can it's all perfectly validated. There's nothing to talk about.
Right.
So let's go on to the real important stuff. And literally we had a 15-minute call. There was like two questions and we were off. So that's where I think owners struggle with really understanding that that is really valuable.
Right.
They, they get a little stuck in, no, they can take it or leave it. I've done this. I don't have to explain myself, or, you know, I just don't want to share that information. It's none of their business. I mean,
It is
I
their
mean,
business, right?
yeah, yeah. I'm sure you could tell a bunch more stories than I can about that, but there's a lot to it, and I was trying to condense it into something, short, but hopefully I helped answer that.
Well, yeah, no, no. And when you only have got 20, 30 minutes, I know we can't get into the weeds with a lot of this stuff. So I certainly understand that. And that's not the purpose. But I do want shop owners to start to get an idea of how important these things are. And I think, like you said, like I'm working on a case right now where the owner basically was running kind of a lifestyle business. All right. He was pulling a lot of his personal expenses out, but his intention was never to sell third party. So we're doing an internal transfer with the child.
Hmm.
Um, but again, if he was looking, I mean, he was basically running all of his personal expenses through the business. Well, if your goal was like, I don't have any family and I don't have, any key employees that want to take it over, and I'm just going to sell to a consolidator or to a large MSO or whatever you're going to do, these things are very important. So, and I know we're coming up on time. So, a question I want to ask you, Bill, give the audience three takeaways, the three things that they should be starting to do right now to start getting them on the path to, where they want that next chapter of their life to go.
I think the first thing you do is, I'm gonna keep this strictly to financials to keep it in context. I think the first thing you should do is, as a shop owner, is look at your chart of accounts. Does it measure what you want to measure? First thing. And keep in mind the chart of accounts doesn't have to stay static. You can adjust it over time. All you have to do is know how to, make the numbers talk to each other.
Right.
Okay. And there are people in the industry that know how to do that. So
Yeah.
don't let that tail wag the dog. So get your chart of accounts clean, organized. Make sure that 2025 is the time. Clean all that up. Get all that legacy behavior behind you, right? Get your reconciliations done. Sit down with your accountant and say, I want clean books. I want my balance sheet clean. If I've got any old transactions in there, I want to get all that stuff cleaned up. That is really, really important. And then I would say also is do a full assessment between CCC and QuickBooks. And so moving into 2026, you can trust your numbers, right?
Right.
So yeah, I wouldn't try to figure it out yourself. And I'm not pitching our company here. Okay.
Right.
It's just what you need to do, right?
Mhm.
If you want to buy a piece of equipment, you're going to buy training for that piece of equipment to ensure that you do it right. Right. If you want to go and say you want to learn how to dive, you're going to hire a dive instructor and you're going to get certified to dive so you can go and safely do that.
Right.
And it's the same. It's the same with your financials. If it isn't clean and perfect now, it's likely not going to get clean and perfect tomorrow.
Right.
So get with the people, get that done. It can be done pretty quickly, and it's not going to break the bank. You can probably do it between, maybe $2,000 and $4,000, something like that.
Mhm.
Not super expensive, but the benefit, the payback on that is
Uh-huh.
enormous.
Uh-huh.
It's absolutely enormous. So that those are probably the things that I would focus on. We tell our clients that now. We say, look, that's the key focus, because the journey of going from where you are to doing daily reconciliations, that's a whole nother animal.
Right. Right. And I think what's really important, you've got to look at that money as an investment. And again, it is about the who's, not the hows. And I think most shop owners, even when you give those steps, may not even know where to begin with that. So I think what you guys are providing is a really valuable service. So we're going to have all your contact information in the show notes. But what is the best way to get a hold of you guys?
Yeah, our website is the easiest way. It's www.crunchitfs.com. On there, there's a book a discovery call. That link books to my calendar. So I make sure that I speak with every one of our interested clients that want to learn more about our business. I have that conversation with them.
Good.
Because I mean, I know the business well, and I can really try to decide what's the best course of action. And I try to put people on that conversation where they don't feel overwhelmed.
Yeah.
You don't have to solve it all right now. Let's
Cool.
just start simple and let's get these things in place and know that it's going to take us 6 months or 3 months or even a year to some cases. And
Right.
that's okay. You had 5, 10 years before that was terrible.
Mhm.
A year of work for the next 10 years is pretty cheap,
Yeah.
right?
Oh, exactly. Isn't that the truth? Isn't that the truth?
Yeah,
Yeah, and that's why I always say it's an investment. I mean, I think too many times we look at the cost of things and don't think of them as investments because the payoff's going to be, like you said, you're looking 20, 30%, increase in multiple. That's huge.
very huge. Yeah, and that's a real number. I
Yeah.
can assure you that that's a legit number.
Oh, I know that. I've worked with shop owners that have clean books. I've had other ones that have just are an absolute mess. And I see the difference there. So I certainly understand.
Yes, yeah.
So, anyway, Bill, I want to thank you for being on Your Business, Your Life. I know we could go on. I mean, we could get down rabbit holes with these things. So,
Yeah, yeah. Well, if
but
you ever want to go down a rabbit hole, I'd love that.
well, we could
I
do that
love,
at some point.
I
Yeah,
love it.
we
Uh-huh.
can at
Happy to
some
do
point
it.
do that. So, but anyway, thanks for being on. The last thanks goes to you, the audience. Thank you for listening to Your Business, Your Life with me, Matt Francesco. If you've not subscribed to the podcast, please click the subscribe button below. That way, when a new episode drops, it'll go right down to your device. You'll get to hear great guests like Bill and all the other ones that we've had on. Also, whether you're listening on iTunes, Spotify, YouTube, Anchor, whatever you're listening to, if you like what you're hearing, please give us a 5-star review. That way we move up the charts and we can get this great content to more people. So again, Bill, thanks so much for being on. And the audience, thank you again. So take care and God bless. Hey, I really want to thank you for listening to the Your Business, Your Life podcast. If you want to be notified when new episodes become available, click the subscribe button below.
All information is obtained from sources deemed reliable but not guaranteed. No tax or legal advice is given nor intended. Content provided herein or on our website should not be construed as an offer for investment advice or for securities, insurance, or other investment products. Investments involve the risk of loss and are not guaranteed. Consult a qualified legal, tax, accounting, or financial professional before implementing any investments or strategy discussed here. HighLift Financial is a DBA for DeFrancesco Financial Concierge, LLC. Investment advisory services are provided through Cornerstone Planning Group, LLC, an independent advisory firm registered with the Securities and Exchange Commission.